I've included our table to save us some recording time. Now guys, I make use of the information provided. When you look at the information that they've provided to us, we need to include our sales, cost of sales, other income, other expenses, income tax, to be able to calculate our profit after tax. Now, we cannot use the amount as provided. Why not? Because number one, we've got intra-group transactions, and number two, there's an increase of 10% on our sales and cost of sales from 1 July. Therefore, you have to use each item separately. Now, I have included this to save us recording time. Our total sales figure is 8.5 million. Okay? We have determined that our monthly sales for the first 6 months is 674,603. Therefore, use this amount times 2, and this will be your sales for January and February, 1349206. Immediately, I will transfer this. I'm going to reference this calculation 2.1 for my market to be able to follow. And then for the 10 months period, I'm going to make use of a balancing figure, B balancing, and this will be 7150794. Okay, now important, they've indicated to us that our sales and this is the important one, cost of sales has increased. Therefore, how do you calculate your cost of sales now? What is the total cost of sales? Our total cost of sales is 2550000. Therefore, first I will include this in my table. And then, guys, I will allocate this proportionately to my sales. What do I mean with this? I've included calculation 2.2 as we have used 2.1 previously. Calculation 2.2. Remember, I now need to allocate my cost of sales proportionately to the first 2 months and then the last 10 months. Therefore, I will make use of the sales that I have calculated in calculation 2.1. Divide this by the 8.5 million times my 2.5 million cost of sales. And this will be 404762. Immediately transfer this to my table and reference this calculation 2.2. Then the last 10 months, this will be my balancing figure, and this will be an amount of 2145238. Next line item, our other income. They've indicated to us in the given scenario that our other income is a total amount of 500,000. Now guys, let's just quickly tick off 8.5, the cost of sales amount, add out 500,000. And guys, what I normally would do is I would transfer other expenses, income tax, and profit after tax to my template immediately, or to my table actually. Now let's just quickly transfer all of this as we have ticked them off as well. I've included this to save us some recording time. Other income, great, this is an easy one guys. Calculation 2.3, we need to use our 500,000 and we need to allocate this 2 over 12. And this will be an amount of 83333. Immediately include this in your table, calculation 2.3, and this will be 83333, and we can include our balancing figure for the last 10 months. This will be 416667. Other expenses. Now immediately guys, you need to think about our intra-group transaction. Remember, they've indicated to us in the given scenario that there's management fees. Briefcase paid a monthly management fee to Handbag. of 50,000. Now they indicate to us that this is during the period 1 March 20.18 to 31 December 20.18. Therefore, what you need to be able to identify is included in our total other expenses is the 500,000. Therefore, in our calculation, we need to identify that we need to take out that 500,000 for the first 2 months. Remember, when you look at your timeline, guys, there's management fees for the period 1 March 20.18 up until 31 December 20.18. Therefore, for this period only. But we need to calculate our first 2 months retained earnings. And that management fees are included in our other expenses. Therefore, we need to take this out. This will be the 2.5 million minus the 50,000 times 10. Divide the total by 12 months times 2. And this will be 333. Same principle applies, guys. We need to include this in our January and February and include our balancing figure. I've included our other expenses calculation 2.4 as well as the balancing figure and the profit before tax. Now we need to calculate our income tax. Again, guys, you need to do this proportionately. Call this calculation 2.5. Proportionately will be the 694,444, which is our profit before tax of January and February, divided by our total profit before tax of 395,000 times our income tax of 255,000, and this will be a total amount of 448,312. Again, we can include this in our table. Again, indicate to your marker calculation 2.5 for your marker to be able to follow. And I have calculated the profit after tax amounts in terms of January and February and our 10 months. Now, our next step, when you look at this, remember you need to transfer your first 2 months to your analysis of owner's equity. Why? Again, when you look at our timeline, we need to include for the first 2 months the profit, as we need to determine what is the retained earnings, guys, on 1 March 20.18. Therefore, my recommendation, indicate to your marker that this will be your calculation 2.6 to be able to follow. And then in your analysis of owner's equity for briefcase, guys, retained earnings 246132, indicate to your marker that this is calculation 2.6 to be able to follow, and I've included our total. Now, as you are busy with this, my recommendation, include for the last 10 months period as well, the profit. When you look at your timeline, guys, include this. Again, calculation 2, look at your table. This will be the 1153868. Indicate to your marker, this is calculation 2.7, and transfer this amount to your analysis of owner's equity 1153868, and this is your calculation 2.7.